Hey traders, Raghee here, and in tonight's free video, we're going to talk about the Dow, and not really so much about the Dow specifically, but about some trade management around profit targets. And I think this is going to be a great lesson for those of you that have been following along with this Dow fade that we took from 17,305 and 17,405, and how we've been managing it from last Friday to today. So it doesn't matter, again, that this is the Dow. It's really about how do you manage a profit target. And if you're looking to squeeze maybe a little bit extra from it, how do you do that tactically? And how do you make sure that you're not just going into what I endearingly call greedy bastard mode? All right, let's tackle it right now. So this trade began with a distribution fade buy down at this overbought area for this chop that's in the Dow. This is no longer an uptrend, but respecting the trend that was is key, and that really makes the buy at this area much more preferable, and that's pretty much what we did, and that was the entry. Now, as the market rallied going into last Friday, so we're talking about price action into the 20th, I said, for those of you that want to take a profit into the weekend, go ahead and take 17,550 off the table. Now, what that means is, one of the things that's so important to being able to get more out of your trades is going into multiple lots. I never recommend one lot. I want you to go into multiple lots, pairs really, 2, 4, 6, 8, whatever it is that you're comfortable with. Go into denominations of 2. This way, you're able to take something off the first profit target, move to a break even, and then go ahead and trail a stop or look for a second profit target. Now, why is this so important? I mean, psychologically speaking, it's important because what I find happens is if you only enter with one lot down in here, you're going to get so greedy bastard in terms of moving higher, because all you're thinking about is the minute that I take something off the table, I've got then nothing left. And consequently, that's probably one of the primary ways traders let winners turn into losers. They just refuse to take something off the table. So we want to prevent that. And what we want to do is, again, remember that if I have two units, whatever it is, this happens to be the Dow, but it could be 2 lots, it could be, multiple shares, whatever it is. If I have 2 units of whatever, I take one off the table here, and that still gives me one to play with. And that's really important, because what'll happen is traders won't move the point of validity stop up, they won't go to a break even, and ultimately they won't pay themselves until the whole trade collapses. And why is that? Because if you were up $500, that's what you want. If it goes down to $400, whatever the number is, you want your 5 again. And if it goes to 5, the pig in the head says, well, it could go to 6, and on it goes. We've all been there. We've absolutely all been there. So what I recommend is, what I recommended was, hey, let's take 550 off the table if you don't want to sit through the weekend. And then today we had another shot at 550. But the way the market was moving, I thought, we might even see 650. I think I talked about that, 8:30 this morning in the morning chat. And we already had this is the 5-minute chart that I've moved to, okay? This is strategically micromanaging. So now what? Well, around 8:30 this morning, I said, hey, there's a real good chance that, 550, if you want to go ahead and take that off the table, that's fine, but there's a chance we could see 650. So I said, here's the deal. Go ahead and keep an eye on the 5-minute chart. And as long as it's a valid swing buy, I call this a guidance trade, as long as it's finding support at the wave, and the wave is heading up at a 12-2 with green grab candles, no problem. Go ahead and just see how high is high. And I said, hey, we could hit 650 this way. So remember, we're not talking about getting completely out of the trade. We're talking about the initial profit target, and then moving to a break even. So right here, we finally broke the wave. We started plotting blue grab candles, broke the wave. Go ahead and take the one lot. And, you might have 3, 4 lots, whatever it is. But at least take one lot off the table and move your stop then to a break even. That's really key here. So if you're in from 17,305, your break even would be 17,295. If you're in from 17,305 and 17,405, your break even would be 17,395. Okay? And that's the way now we can be in a place within the context of this trade that we're only risking house money, not our capital. It's only unrealized capital that's at risk moving down to a break even. So we're willing to see how high is high. Now, this is pretty important when we try to understand the wiggle that we need to give a market. Let me show you what I mean by that. And maybe we could make this a conversation for another free video. But when I want to back off a pair or a contract, whatever it is, I want to look at the typical price movement range. This gives me a very high degree of understanding for volatility. This is a 68% probability for what the Dow does. I know the Dow is capable on just an average day to be moving in around 230 to 240 pips. That's the average. That's the band across each one of these green bars. I need to realize that that's just the ebb and flow of the Dow. I need to realize that that is just what I need to be willing to back off by. And I want to strategically back off, not by dollars, not by a percent, by a very specific number of points. And I'll even know whether to look at the average to the high or the average to the low based upon the economic calendar. The best economic calendar out there is by far Forex Factory. If you need to know specific earnings, I like looking at earnings whispers. If you want to look at different commodities reports, that's different. You might have to go to a different place to understand inventories or crop reports or things like that. But generally speaking, if you're primarily a currency trader, an equities trader, and you trade some what I call Forextra futures along with it, which would be this top half of my quote window. If you look at Forextra futures as well, the Forex Factory calendar will take care of it. So again, this is how I manage and actually tactically micromanage a winner, because 550 is great, but 650, that's better. I'll see you in the next update.